hi everyone. My name is Judy Ann Harris. I'm the Chief Marketing Officer for Valley National Financial Advisors, and we're so pleased that you could join us today for this topic. We all know it's been a longer than expected tax season this year for a number of reasons. So there's some really good information that we're going to be able to share with you kind of on what's been going on and what some of the planning ideas are that we're looking looking ahead. Just some housekeeping issues. All attendees are in listen-only mode, so you do have the ability to submit questions. There should be a little toolbox where you can type in your questions. Please feel free to do that at any time. We will be kind of answering all of the questions in a Q&A toward the end of our time, but please feel free to submit them at any point when you have a question. So let's get started. Okay, so again, before we begin, this session is being recorded, so you will all receive a link to the recording, probably sometime next week, so that if you missed part of it or you wanted to revisit or you wanted to share it with someone else, it will be available for you. Again, please submit questions using the question box. And then, we kind of went over attendees are in listen-only mode. Most people are probably used to the whole thing with webinars, so no worries there. But if you have any questions or concerns about the setup, being able to hear, or the way things are functioning, feel free to pop that into the Q&A or into the chat box as well, and I'll try to address it for you. So let me just take just a quick minute to introduce our panelists today. So we have three wonderful people from our team, and the first is Elizabeth Wilson. And not only is Elizabeth head of our tax services, but she really helps run our entire firm as our chief financial officer. So she has a wealth of experience and knowledge. So we're really pleased to have her presenting today. Our second presenter is Mandy, and she is our senior tax manager. She's been part of our team for 12 years, helping clients with preparation and planning, as well as being a leader and a mentor for all of our tax professionals. And then our third speaker today is John, and he is also a CPA, but he's in addition a certified financial planning professional, excuse me. And so he has more than 10 years of experience, and he works regularly with clients on tax planning as part of their overall financial plans. So just want to give a quick reminder that this information is for information and educational purposes only. If you have specific advice related to your personal situation, please consult with your financial advisor or your tax professional. As many of you know, our fiscal offices have closed on March 20th due to the pandemic, and our full team has been working remotely since then. So just a reminder too, that we are readily accessible. You can call our offices at any time and leave a message. We get an automatic email and we're notified of that. You can also email us at a number of different email addresses, one being tax@valleynationalgroup.com, or you can use the contact forms on our website. So I'll be posting some things in the chat with links to different resources and things that we provide throughout the webinar. Feel free to ask any questions about that as well. So without further ado, I am going to hand it over to Elizabeth to get us started.
For getting us teed up. Thank you everyone for joining us today. We're happy to have you. I'm pleased to be here presenting with Mandy and with John. I think we have a lot of great content for you today. So our agenda today is really going to consist of three main topics. And the first one is going to be what I'm going to talk about at the beginning, which is a tax team update. We're going to go a little bit into how we've been operating remotely since the end of March, how we've been processing returns, what exactly our process is, and then to get some more detail on some of the process that happens at the very end, specifically your 8879 forms and how we're accepting those digitally and with digital signatures. We're going to talk a little bit about how you can check on the status of your return. There's numerous ways to get in contact with us, as Judy Ann had mentioned. We'll talk a little bit about how you're going to pay your bill and give you some insight on how we try to stay connected as a team. So after I wrap that part up, I'm going to hand it over to Mandy. She's going to walk us through some changes that have been made in 2020 that impact the 2019 filing year. She'll talk to us about some IRS changes, the economic impact payments that people have received or in some cases are still waiting to receive. And she'll also go into some detail about business tax provisions. And when Mandy is done sharing her wealth of knowledge with us, she will hand it over to John, who will give us some insight into 2020 tax planning, specifically around CARES Act and some relating planning topics. So I will get going into our tax team update. And as Judy Ann mentioned, we have been working in a remote environment since March 20th. The number one goal for our organization at all times is to protect and keep safe and healthy our employees and our clients. That's very important to us from an executive management standpoint and from an organizational standpoint. So we had made the decision back at the end of March to take our workforce remote. And while that does present some challenges, as it has for everyone these last couple months, we were happy that it kind of coincided with the IRS announcing the extension to the filing deadline. So when we were getting ready to leave the offices, we were all kind of keeping our fingers crossed, hoping that the IRS would decide to extend that deadline. And almost really at the same time, they did that. And they automatically extended that deadline to July 15th, which Mandy will give us a little bit more insight into. So what have we been doing since then? We have been continuing to prepare and process tax returns. For a while, up until the beginning of May, we were doing that with electronic documents that we had received. We made sure that before we left the office, anything that we had received in paper was scanned so that we could work electronically with it. And then we were encouraging clients, tax clients, asset management clients to get us any other documents that they had electronically via their secure client portals. So we were able to keep up and maintain preparing some of those returns. Our advisors and all of our team really has been very busy talking with clients, meeting with clients, of course, in a virtual environment, which we've all kind of quickly adapted to, which is great. They've been talking to clients about the CARES Act and stimulus payments and PPP loans and any information really that we get from the IRS or the Pennsylvania Department of Revenue or other state revenue agencies. We've been trying to share that with our clients and make sure everyone stays informed and up with the latest news. The next kind of big announcement we had was at the very beginning of May, we put out a message that we were going to actually begin accepting paper documents in our office once again, because we had put out the message to please hold on to your paper at the end of March because we weren't sure when we would get back in the office. And then as it became clear that we were going to be remote for an extended period of time, we announced at the beginning of May that we would be taking paper documents sent to our office via the Postal Service. We're only actually accepting documents via the Postal Service at this time. UPS and FedEx are not delivering to our office because we are closed. So since we've made that announcement, we've gotten in some paper tax documents and we've been able to continue to work through our tax preparation process. So I want to talk to you a little bit about what our tax prep process looks like, whether you're a client of ours or not, or if you're an asset management client or a tax client and or a combination. We want to give a little bit of insight on what actually that process looks like. So it kind of follows this roadmap where we intake your documents. There's many ways to do that in a normal environment. As I've just talked about, we are really trying to focus on electronic document intake through portals. We don't encourage email. We have a very secure client portal that is a great way for us to exchange information, both clients to us and us to clients. So once we intake that information, we have an internal system which we route it to a team of tax preparers. There is usually a preparer and then an assigned reviewer for that tax return as well. It's typical that the reviewer is your advisor or someone on your advisory team. And if someone is not available, that's where myself and Mandy and some other of our CPAs come into play. So we have an internal process in which we set up the return, we prepare it, we work in an internal team to prepare it, to review it, make sure it looks good to go, compare it to last year, reach out to our clients, make sure that we have all the information, or if we have more questions, we get the information that we need. And then once we have all that, we feel the return is good to go, we send it on to our internal processing team. and our processing team gets it ready to deliver to our clients. Again, we are really only doing, well, for a while we were only doing electronic processing, and then we did start, again, at the end, or towards the middle of May, getting processors in the office on a rotational basis just to process paper tax returns so that we can get those turned around as well. So we are actually mailing returns via USPS at this point as well. I'm going to go into a little bit more detail on the next couple slides about some things that happen after delivery to the client. Once the client gets the tax return, obviously you're going to review it. You're going to contact us with any questions that you may have. But really the last pieces of this puzzle are, once it's reviewed, you need to get back to us your 8879 form. And what those are is, those are the permission that you give us to actually file your return. So your return is not actually done until we receive that 8879. We file it with the government, and then we actually follow up with them, not with them directly, but through our software, as to when the returns are accepted. And then we really consider the return set, final, done once we've gotten confirmation of that acceptance. But we can't do that process until we get back your 8879 form. So because we are in a remote environment, and we still are in a remote environment, we looked into some of the IRS rules around signatures on these 8879. And what we've been doing is testing digital signatures on those 8879, whether that's typing your name into a PDF, if you have software on your computer which allows you to sign it or stamp it, and then getting it back to us. And once we receive those forms back, then we can move on to the next step in the process, which I had said, which is actually filing the return and then getting it accepted by the government. I want to talk a little bit about how you can check on the status. So once you've received your return, you've reviewed it, everything looks good to you, you've given us back your 8879 form, and we go ahead and we file it. Now, throughout our tax preparation process, there may be different times when you want to get in touch with us. And how you do that, there's actually 4 different ways. You can reach out to your tax preparer directly if you know who that person is. You can reach out to your advisory service team, and the information will certainly get to the right people. You can call our offices and leave a voicemail. So before we left the offices, we made sure that we had different voicemail prompts, and those voice messages were getting delivered to the appropriate person to handle those. So although we're not sitting at our desk answering the phone, we actually get an email with that voicemail message so that we can listen to it and then respond to your inquiry or your question within a reasonable amount of time. So that is still an option for you, to call the office and leave a voicemail. And again, your request or your phone call or your message will get to the right place. And the way to communicate us that we are really kind of, it's usually the quickest, you get the quickest response, it gets to us the quickest, is you can email us at tax@valleynationalgroup.com. And that email is monitored pretty much throughout the day at all times, and again, routed to the correct person. Another question that we get is really about paying bills. So we've received your 8879. Along the way, you've checked in with status on us. We get a lot of questions about, can I pay my bill electronically? Do I have to send you a check? Are you accepting checks? So there are actually 2 ways in which we can do this. You do get a copy of your invoice with the hard copy of your tax return. You have an option to actually write a check and mail it to us. Even though we're not in the office, we are still intaking the mail, and every other week or so, we are processing those check payments. So that is an option for you. The option that is, again, the quickest and the most convenient for both you and for our accounting staff is, if we have an email on file for you, when your return is processed, an email will be generated and sent to you from Lauren Ross, who's our senior accountant on staff. And that is actually an email that contains a secure payment link specific to your invoice. Now, it's not a payment portal where you can go on and you can say, I want to pay my invoice. How do I do that? We actually have to generate the email and send it to you with that secure link. Once you click on that secure link, you have the option to pay us via credit card, debit card, or ACH transfer. And that link is actually good for 24 hours. But if you miss that 24-hour window, You could email us, you can call us, whatever it may be, and we can generate a new one and get that sent out to you. That's a little bit about our process and how we go through it internally. I want to provide a little bit of insight on the steps that we take as a team to stay connected and informed. As I've said, and as I'm sure that you've all experienced, this kind of switch to virtual team meetings and talking via the phone a lot more, and we're missing out on some of that face-to-face contact. We hold weekly all hands on deck meetings. As you can see here on our slide, is a snapshot of a picture from one of our all team meetings, which we hold weekly. We also hold weekly tax meetings amongst the tax preparers and tax reviewers and some of the advisory staff. There's also weekly advisor meetings that are held as well. Again, using these electronic mechanisms that are available to us. And during those meetings, not only do we get a chance to connect as a team, we also get a chance to share articles and links, and most importantly, client experiences that we've had. A lot of us are getting the same questions from our clients, so we like to share that and, kind of use best practices that other people have found to be effective. We also closely monitor what's going on with the IRS and the state revenue agencies, and we share that information amongst the team. We're very fortunate in that we have a good number of employees, and we have different subsets of employees that have different skill sets, and we're able to share not only advisory, asset management, and tax experience, but also help each other out from a technology standpoint, and really just trying to stay in touch and keep some of that human interaction in our team so that we can, maintain that personal connection with each other, and then in turn with you, our clients. So at this point, I'm actually going to turn it over to Mandy, and she will walk us through these 2019 tax changes they're changes that have been made in 2020 for the 2019 tax filing year. And I know that she has a great deal of experience and knowledge to share with us. So Mandy, take it away.
Thank you. As Elizabeth mentioned, the due date for federal tax returns and other form filing obligations due on or after April 1st and before July 15th are automatically extended to July 15th, 2020. When hearing this, we think of our personal return, Form 1040. However, this extension applies to many other filing requirements, including, but not limited to, your first and second quarter estimated payments, gift tax returns, estate tax returns, and even extending the 3-year statute of limitations to claim a refund by filing an amended return. You don't have to be sick, quarantine, or have any other impact from COVID-19 to qualify for this relief. It's automatic, which means you don't need to file any forms or call the IRS to qualify. In connection with this automatic extension, the April 15th deadline for making 2019 contributions to a traditional or Roth IRA, HSA Health Savings Account, or MSA Medical Savings Account have also been extended. If you've already filed your return and you want to take advantage of the extra time to make these contributions, please contact your tax preparer. If you have not yet filed your return, there's still approximately a month and a half to do so. We recommend everybody who has not yet filed gather and organize all of their tax documents and support, as the information on the 2019 return is critical in many of the other tax provisions for which you may qualify. If you need additional time beyond the July 15th deadline, you can still apply for an extension to file until October 15th, but the payment of any liability is still due July 15th. Due to the stay-at-home orders, certain IRS services, such as processing paper returns, responding to correspondence, and live assistance on the phone, are extremely limited or suspended until further notice. If you've already filed a paper return that has not yet been processed, the IRS asks that you do not file a second copy or write them inquiring about the status. The return will be processed once they reopen. The CARES Act established a new refundable economic impact credit, also known as the Recovery Rebate Credit, or more commonly known as the stimulus payment. Individual filers with adjusted gross income under $75,000 will receive a $1,200 payment, while joint filers with AGI under $150,000 will receive a $2,400 payment. Parents with a qualifying child under the age of 17 will also receive an additional $500 credit for each child. The amount of each recovery rebate credit is phased out by $5 for every $100 in excess of these income thresholds. In efforts to support individuals and businesses during this time, in April, the IRS began sending advanced credits to taxpayers based on the adjusted gross income reported on the 2019 return. If your 2019 return has not yet been filed, the advanced credit was calculated based on 2018 income. If you believe your 2019 return will show a lower income or otherwise change your eligibility, you may want to consider accelerating the filing of the return. Likewise, if you have not yet filed your 2019 return and will qualify for a larger benefit by using the 2018 return, you may want to consider delaying filing until you receive the stimulus payment. If the IRS has your bank account information on file, payments were automatically deposited into that account, and you will receive a letter alerting you of the deposit. For taxpayers who receive refunds in the mail, your rebate will be mailed to the address on record. Some people will receive their payments as a debit card that will come in a plain envelope with instructions as to how to set up a PIN number to access the funds. It's important to keep track of the amount of the advanced payment you receive, as the actual credit is calculated on the 2020 return. The provision states that there is no clawback, which means if you qualify and receive the payment based on 2000 or 2018 or 2019 return, but no longer qualify in 2020, it does not need to be repaid. However, if as part of your 2020 return, you're entitled to a larger credit than what you actually received, you will receive the additional money when filing the 2020 return. There are a number of business provisions that are now available. I'm just going to touch on 4 of them: the Pandemic Unemployment Assistance, payroll tax deferrals, the Paycheck Protection Program, and the Sick and Family Leave Credit. First is the Pandemic Unemployment Assistance. Typically, self-employed individuals do not pay unemployment taxes and therefore are not entitled to collect unemployment benefits. However, as part of the CARES Act, Pandemic Unemployment Assistance, or PUA, was established to cover the self-employed. The amount of PUA benefit you receive is based on previous income reported, limited to the state's maximum weekly benefit rate for regular unemployment. For Pennsylvania, unemployment ranges from $195 to $572 a week. In addition to the state unemployment, all individuals collecting PUA will also receive an additional $600 a week in federal pandemic unemployment compensation. This federal payment will begin the week ending April 4th and will last for 4 months until July 25th, 2020. The website to claim PUA is different from the website to collect regular unemployment. So if you're self-employed and have filed for unemployment and have been denied, double check and make sure that you're applying for PUA and not regular unemployment. The second topic I want to highlight is the delayed payment for employer payroll taxes. When calculating your estimated tax payments, it's important for self-employed individuals to consider if they would like to take advantage of the delayed payment for employer payroll taxes. In efforts to free up cash flow, payroll taxes that are due starting March 27th, which is the date the CARES Act was signed into law, and ending on December 31st, 2020, can be deferred. Total payroll taxes incurred by employers, or 50%, which is the employer portion of payroll taxes incurred by self-employed persons, may qualify for this deferral. Half of the payroll taxes are due on December 31st, 2021, while the balance is due December 31st, 2022. By taking advantage of this deferral, self-employed individuals may be able to reduce their current estimated tax payments. The third is the Paycheck Protection Program, which is established by the CARES Act to provide loans to assist small businesses and sole proprietors on certain expenses incurred during the economic challenges due to the COVID-19 emergency. The loan is administered by the Small Business Administration, and businesses are typically allowed to borrow 2.5 times their monthly payroll costs to use for expenses, including payroll, mortgage interest, rent, and utilities. Payroll costs are capped at $100,000 per employee per year. Currently, if the business uses at least 75% of the loan proceeds for payroll costs, which include wages, health insurance, retirement contributions, and state and local taxes assessed on employee compensation, the entire loan would be forgiven. However, the House just passed a new stipulation that will forgive this, so only it forgives the 25% non-payroll requirements. We have to wait and see if the Senate will also pass something like this, and it will no longer matter what the expenses are paid for. Employers who conduct layoffs or reduce employee compensation may also have forgiveness amounts reduced. The SBA just released the loan forgiveness application based on current rules. Businesses should work with their payroll companies to gather the documentation needed to complete the application. If the business does not qualify for forgiveness, interest is at 1% on the 2-year term loan and can be deferred from 6 months to a year. The first round of PPP funding was exhausted, but Congress has appropriated more funds which still may be available. Please contact your loan officer for more information. And the last topic I want to highlight is the sick and family leave credit. As part of the Families First Coronavirus Act, employers with fewer than 500 employees are required to pay leave to employees who are forced to stay home due to quarantining themselves, to care for a family member, or to care for a child if the school or daycare is closed. Self-employed individuals may also benefit from this credit as if they were an employee and can claim the credit against regular taxes. The calculation can be complex, so you want to talk to a tax advisor about it, but the credit can be up to $2,000, so it's worth investigating if it applies to you. This credit only applies for 2020, so make sure you keep detailed records if you think you may qualify. Now, John is going to talk more about tax planning opportunities for 2020.
Maybe we could take a question or two while we try to get John figured out.
Oh, absolutely. So we had a few questions that were submitted in advance. So let's throw some of those out. And in fact, it's a good time for that because some of these really apply to some of the things that Mandy was just talking about. So the first question, I'll direct it to you, Mandy, is the question we've had is, will the IRS charge any interest or penalties if I wait until July to pay my taxes?
No. The IRS said that they're not going to charge any penalties or interest on income tax payments that are mailed by the July 15th due date, regardless of the amount owed. Likewise, for 2020 first and second quarter estimates, they will be considered timely filed if they are also mailed by the July 15th deadline.
Awesome. And as a follow-up, kind of a related question, if someone has filed their return, we had a question about paper tax returns. You mentioned limited services from the IRS. So is there a way to confirm that my paper tax return was received by the IRS?
Once the return is in the IRS system, we can check on the status, but unfortunately, until the return gets scanned into their system, there's no way for us to confirm if they've received it or not.
Okay, thanks, Mandy. So you mentioned the debit card, Mandy. I know that's kind of a new way for people to get these stimulus payments. So how can one tell if that debit card they receive in the mail, since you said it comes in a plain paper envelope, how can they tell if that's the real thing and not one of these frauds that have been coming up very frequently?
Yeah, the card will arrive in a plain envelope from Money Network Cardholder Services. The Visa name will appear on the front of the card, and the back of the card will have the name of the issuing bank, which is MetaBank. There's also going to be information including included with the card that will explain that it's your EIP card. If you have any questions, you can always go to the website. It's eipcard.com.
Just wanted to jump in and cover a couple 2020 tax planning related items. There were some individual tax items in the CARES Act I just wanted to touch on, related to a few acts. Coronavirus Aid, Relief, and Economic Security Act. I'll be referring to it as the CARES Act just because I can never remember the name. It's easier. It was passed by Congress on March 27th. It was a broad related bill. It had business tax provisions. It had the economic stimulus payments in it. It was a very, very broad bill, but it did include a few individual tax items that we wanted to cover on this webinar. The four that we're going to touch on, charitable deductions. There's also, they made some changes there. Early distribution waivers. They made some changes to require minimum distributions. As we already touched on, the tax payment due dates were adjusted. Just want to jump into the first one for charitable deductions. For those that claim the standard deduction, there's now a new $300 deduction for cash contributions to public charities. And this is important because if you're utilizing the standard deduction, it means that the sum of your itemized deductions, your medical expenses, your state and local income taxes, property taxes, charitable contributions, mortgage interest, the sum of those were actually less than the standard deduction. So when that happens, you actually don't receive any direct tax benefit for any cash contributions to charity. But in this instance, they've actually said, okay, even if you take the standard deduction, for 2020, you can take an additional $300 deduction for any cash contributions made to public charities. So it's important, even if you're a regular taxpayer that utilizes the standard deduction, you get an extra $300 deduction for 2020. So if you don't normally itemize, make sure to keep accurate records and substantiation for any charitable contributions in 2020, because you're actually able to utilize up to $300 worth. There was also a second change to charitable contributions. The IRS, you actually limits the amount of charitable contributions you're allowed to deduct in 1 year. The regular limit is actually 60% of your adjusted gross income. So what that means is if your adjusted gross income for the year is $100,000, you're actually only able to deduct $60,000 of cash contributions to charity. If you actually contribute more than that, you actually can't take the deduction in that year. You actually have to carry it forward to the following year, which isn't great for tax purposes. So what they did for 2020 is actually increase that to $100,000 to 100% of adjusted gross income. So one of the things to think about is, you know, if you normally or are going to be, if you happen to give a lot to charity, do you want to take advantage of this now higher limit? Or if your income just happens to be lower relative to your charitable contributions in 2020, does it make sense to accelerate some future contributions into 2020 to actually be able to utilize this higher limit? So that's one thing we're looking at for people that are very charitable. The other way around is if you happen to have very low income this year and you want to make a large charitable contribution, but you actually don't have the adjusted gross income to utilize the contribution, could it be combined with a Roth conversion in order to create the income to offset the deduction? And I know that's a lot of information, but for the Roth conversion, what that is you actually take monies in your traditional IRA account and you convert that into a Roth IRA. So you would actually pay taxes on the amount that you convert. But once the money is in the Roth IRA, that money can be withdrawn tax-free, and it also is not subject to required minimum distributions, which is very advantageous. So in theory, you can make a large charitable contribution and actually do a Roth conversion combined and potentially, make a Roth conversion at little to no taxes. So that's it's a complicated strategy, but we're definitely we're looking at it, and it could definitely be a big payoff if it fits your situation. The next major topic is on required minimum distributions. For 2020, any required minimum distributions that are required to be paid are waived. So what this means is, if you normally use your required minimum distribution to meet your living expenses, you actually can choose not to take that RMD in 2020. You can choose to just not take it and use other funds to meet your living expenses. So we're definitely looking at that, because that removes taxable income potentially from your situation. One other thing we're looking at from a tax perspective is, if you would choose to not take your RMD in 2020, sometimes we use tax withholding on your required minimum distribution to help cover the taxes on your other forms of income. So, for example, you might have Social Security income that you either don't have tax withholding on, or you have pension income that has very little withholding, or you have interest income or dividend income, other investment income that doesn't have any tax withholding. You might actually use your required minimum distribution every year to have a little bit of extra tax withheld to help cover those other income items that don't have tax withholding. So if you choose to not take your required minimum distribution in 2020, one of the things you need to think about is, do you now have to make quarterly estimated payments for 2020? Because that not only is the income not there, but the withholding will also not be there. So we're running a lot of 2020 tax projections to make sure that we don't have to run into underpayment penalties if the required minimum distribution is not there along with the tax withholding. The next item I was going to cover is the waiver of early distribution penalties. So if you've been affected by the coronavirus, if you've been economically harmed as a result of it due to business closures, layoffs, reduced hours, you can actually withdraw up to $100,000 from your IRA or 401k in 2020 without incurring a 10% early distribution penalty. And what this penalty is meant to do is kind of discourage people from drawing from their retirement accounts before they reach the age of 59 and a half. But the IRS is actually saying, okay, if you've been affected by the coronavirus, you can actually withdraw up to $100,000, and you're still going to pay tax on the withdrawal, but it's going to be taxed over a 3-year period, and you're not going to have to pay the penalty on it. So, for example, if you were going to take $10,000 out this year, you would have to pay taxes on $10,000, but it would be evenly spread. You'd have to pay $3,333 of taxes this year, next year, and the following year. It would be evenly spread over those 3 years, and you wouldn't have to pay the distribution penalty. The other item with this is you can actually choose to recontribute those funds at a later date back into your IRA or qualified retirement plan and eliminate the otherwise reportable taxable income. So you can almost use this as a temporary cash flow issue. And I thought about this. I was talking to a wedding photographer the other day, and they said that their business is really down this year. They're really hurting for funds right now, but they said, almost everyone that was having a wedding this year has pushed it to next year. So they think their income's going to be really low this year, but almost double next year. So for them, it might be a good situation for them, rather than going into credit card debt or having to take out a personal loan at a high interest rate. Does it make sense for them to take a withdrawal from their IRA, pay, a third of the tax, and then next year when they have the money from the increase in business, when they get back on their feet, they can potentially put the money back in and kind of offset the taxable income and kind of use it as a cash flow item, a temporary cash flow item. So that's something we're looking into. It's definitely an option if you've been harmed by the coronavirus, and it's an interesting provision in the CARES Act bill that we're looking at for some clients. The next issue is the tax payment due dates. Obviously, we know with the tax payments coming due, you not only have to consider your prior year liabilities that you still might owe, you have to also consider for those who make estimated payments. You could also have to make those as well at the same time. So for example, let's say, June 15th or July 15th, you go to file your 2019 return. You have to pay your tax liability, federal, state, and local potentially. You could potentially have to make your first quarter 2020 estimates, your second quarter 2020 estimated payments, and also potentially fund a traditional IRA contribution and potentially a health savings account contribution. So if my math is correct, that could be about 11 checks that you could potentially have to write at one time. So for clients that are in this situation, we're trying to give them a heads up for cash flow planning. Does it make sense to raise some cash now and park some aside for taxes, knowing that this bill's coming? It's just something to consider that, as these delays go on, at some point, these payments are going to have to be made. So it's just something to consider that it's odd to have all of these potential tax payments due on at the same time. So just something to think about. And with that, I think I'm going to pass it back to Elizabeth.
Thank you, John. So we kind of want to wrap here a little bit with what are the key takeaways from today. We've identified 3 key takeaways that we'd like for you to take with you and digest and talk with your finance or your tax professional on some of these. The first is to understand your options. And I think it's very clear between the information that Mandy presented today and the information that John just presented that there are a lot of options out there. And there's a lot of information, and some of it may apply to some people and some of it doesn't apply to others. And there's different combinations that can apply to you in your individual situation. So even if you can't understand those options on your own, please consult with your financial advisor or your tax professional and decide what's best for you and your individual situation, whether you're a client of ours or not. So that's our first key takeaway for you today. Our second key takeaway is to get us your tax documents. So even though we have until July 15th to get these filed and get them paid, we are trying to accelerate that. So even if you aren't one of our tax clients and you haven't completed your tax return, I think it's important at this point to gather that information and get the ball rolling. If you are a tax client of ours and we don't have everything that we need from you, get us those tax documents. Electronic method is preferred, but we are accepting paper at this point. And the earlier and the more prepared the information is when it gets to us, the easier, the more seamless the process goes. And our third key takeaway is how to stay informed. And specific to Valley National, I'm going to turn it over to Judy Ann, and she's going to walk us through a couple different ways for you to stay informed and stay up to date with Valley National. So it's all yours, Judy Ann.
Thanks, Elizabeth. So just a couple things I want to kind of highlight in case you guys aren't all familiar with some of these resources. And again, I'll put links in the chat so that you have easier access to some of these things. But I hope that most of you have heard this show. It's called Your Financial Choices, and it's Wednesday nights on WDIY, which is our local NPR station. And it's hosted by Lori Siebert, who is one of our senior vice presidents and a financial advisor. And talk about amazing information. You won't know what to do with all the stuff you will learn. So I would encourage you to listen to that show. So it's on every Wednesday night at 6 p.m. Lori is pre-recording the shows at this point because she's, for safety reasons, not going to the actual station. But the nice thing is she's able to address questions that are submitted to her on our website, which is yourfinancialchoices.com. The second is the weekly commentary, and hopefully everyone on this webinar is already subscribed to it. If not, it's very easy to go on our website. It's a free weekly email newsletter from our team, and it includes insights, updates, kind of the latest things that we're thinking about that we want you to know about. And it's just a really nice little easy way on a Tuesday morning to get the latest and greatest from our team. It's also posted on our website at valleynationalgroup.com, so you can always access those posts even if you don't sign up for the newsletter. And then finally, we are on social media. We're on Facebook, we're on Twitter, and we're on LinkedIn. So if you are on any of those social platforms, please follow us. That way you can kind of get the latest updates as we post them there, and be able to see what's going on with our team as well. So like I said, I'll post those links into the chat in just a moment. For now, I wanted to do a quick poll. I have a question for the audience. And this is really because we just started doing webinars, you know, as a lot of people have, since we're all staying at home. And so what is the financial topic webinar that you would consider attending? Obviously, you've attended this one. So I'm going to go ahead and launch this poll quickly to give you, I think I'm going to launch this poll quickly. There we go. So just to give you an idea of some of the topics that we've been hearing about, that we've been thinking about. So I'll just give, you know, maybe another 10, 15 seconds for everybody to just kind of click on whatever they might be interested in. And this is really going to help our team because we really want to make sure that we're getting as much information out there to as many people as possible, because really at the end of the day, our mission is to help people make the right financial choices. So whatever your feedback is, we will do our best to kind of circle back and have more information and possibly events like this where you can get that and get the information you want and share it with the people that you care about. So I'm going to go ahead and close that poll for now. Thank you so much for participating. And then we're going to jump into the Q&A here. So we already went through a couple questions that Mandy was very great to answer. I'm going to circle back to John actually with this next question that we got. And this question is, do you think there's going to be more changes in 2020 that could affect my taxes?
Thanks, Judy-Ann. I think there's definitely a possibility, but nothing set in stone. I know we're constantly keeping track of what I like to call rumblings in Congress, where some details, you know, tend to leak out about potential new bills that could be coming up in the House or Senate. They're definitely looking at a potential second economic stimulus payment. But it seems to be very similar to the terms of the first one, and I didn't see any additional kind of individual tax changes on top of that. But you know, as this virus drags on, there's definitely a possibility of it, and it's something we're following on a daily basis.
Awesome, thanks. We did get a couple more questions during the broadcast here, so let me pull those up really quickly. Let me see. So another one, actually, John, or actually any of you, or maybe Mandy could answer this question. So I've heard that they might delay the due date beyond July 15th. Do you think they will extend it more? Meaning the IRS, I assume.
I'll take this one. It was definitely reported that the Trump administration was considering it, but there was nothing officially released or really any other data other than I would say kind of like a anonymous source. And we really haven't seen anything set in stone. I personally don't think they're going to extend it again. I think we're getting too close to the July 15th deadline to extend it. I think if they were going to do it, they would have done it by now. But again, nothing's written in stone. But my feeling is that unless this virus takes a turn for the worse, I don't think it will be extended. But it's a possibility.
Awesome, thanks. Yeah, it seems like anything's a possibility anymore. So another question we had, and Mandy or Elizabeth, actually any of you could answer this, but, oh, actually we already asked that question about the debit cards, so I apologize. So the debit cards we talked about, and we got that website for the I think it was EIP.com. So hopefully everybody got that link. Let's see here. It looks like we are running up on the end of our time here. Unless there's anything else our panelists wanted to add, I wanted to make sure to thank all of you for attending today and just remind you that, you know, our team is accessible for you. So if you go to our website at any time, we have a quick link to valleynationalgroup.com/tax. And that will take you to the tax services page where we really try to update that on a regular basis with some of these frequently asked questions, especially about our team and our process. And you can always email us at tax@valleynationalgroup.com. There's also an inquiry form on that web page that will send an email directly to the tax email address. So we do welcome your inquiries. You are not bothering us by any means. If you have a question or you want to know the status of something, please feel free to reach out to us. Anything else that you guys want to add?
This is Elizabeth. I don't have anything to add besides, you know, thank everyone for joining us today, and we will do our best to keep you informed as we stay informed.
Awesome. Thank you, everyone, and have a great evening. Stay safe, and we will be in touch with you again soon.